Today we are expecting the mid-report on the Royal Commission. I'm going to be speaking to Stephen and Daniel from Progressive Finance to find out how this inquiry into the banking sector has impacted banking as well as the brokers and brokerage policies, and as the banks get stricter, how that makes harder for people to get lending and finance. I'm here today with Steve and Daniel from Progressive Finance, and we're talking about the announcement that's expected today from the Royal Commission. How are you guys?
Yeah, well, thanks.
Well, thanks.
Excellent. And so, Steve, what's expected to come out with this announcement? Are you aware?
Look, there's probably some key things we anticipate. Some of them revolve around behaviour in banking generally. There's been a lot of media about some of the bad behaviours and unethical practices that have been happening. So we expect to see a change to the landscape in the way banking governance works. So we would expect some changes there. We'd also expect to see that flow through to the way our industry as mortgage brokers and also perhaps financial advisors put maybe under a little more scrutiny in terms of how they behave and ensuring that they put the benefits of their customers before anyone else, which we think is a great thing. For Daniel and I, we've been doing that our whole broking career, so it's nothing new. But I think, in terms of professionalism of the industry, I think it's going to be a good step forward. We've seen some changes already happening in the banking landscape, which directly affects borrowers, and maybe Daniel, has a pretty good insight into how that works.
So Daniel, is the restructuring coming out as a result of this inquiry, the initial part of the inquiry, making it harder for borrowers?
Yeah, the banks are they've already adjusted, so they've made a lot of the changes early on prior to the announcement of the Royal Commission, so the banks are trying to be ahead of the game a little bit. So that has made it harder for some people in terms of how much they can borrow. So it's important for us to sort of dig deep into what their situation is and provide some advice as to getting them ready to be able to borrow money when they need to. I can't see there being a lot of changes that everyday people need to worry about, but it's just being aware of what the banks nowadays are looking for and how we can help them borrow or buy property.
Sure.
And I think what's just expanding on that a little bit, I think one segment of the market that is probably going to be the most negatively impacted will be those clients out there who have a lot of investment property. We've seen a very distinct change in the bank's appetite to investment lending. This has flowed on now to very definite finite periods for interest-only loans. So a lot of clients coming out of interest-only periods with lending, in some cases being made to go principal and interest and pay back that debt. Well, that's not a bad thing in terms of responsible lending. It can be a very difficult thing for a client to manage with substantial debt, interest-only, reverting to principal and interest, and then having to find much greater cash flow in order to meet those repayments.
Makes sense. And what about interest rates potentially going up? Is that going to impact some of the borrowers that are out there that are already struggling from your perspective?
Yeah, it's a little bit of a grey area. The RBA is putting things on hold for the minute. The banks recently made a small move upwards, so it's had a bit of an effect on monthly repayments to individual clients. There's no real talk of a major rate rise anytime soon, but it's just something people should be aware of. It's also a good time to look at fixing interest rates as well, because they're really, really low at the moment. So it's certainly a topic we talk about a lot every single day at the minute. So yeah.
How do you prepare borrowers?
Great question, and that's what I was just going to talk about then, is with all these changes that are happening, it's really important that borrowers and people dealing with banks are sitting down and talking to a trusted advisor who is going to help them with a strategy in how to deal with and overcome these new parameters that are going to be put in place by banks. I mean, especially investment clients with large amounts of investment portfolio or investment lending and interest only, having a plan to deal with that now rather than waiting till that interest only period expires, because their options may be even less by then. And I think dealing with interest rate rises, although the rise that occurred, there was a lot of media about that, it wasn't overly significant. I think a big part of what we're seeing in the marketplace right now is clients just generally becoming much more aware of their finances, and they need to be able to sit down and deal with a trusted advisor who can help them put in place some sort of management plan, assess where they're at right now, make some good decisions going forward, structure things properly, because I guess what we've seen through that boom period that we had years ago in Perth is that money was free and easy, and a lot of clients didn't necessarily have to keep an eye on their budget as much as they do now. So we need to create those good patterns of behaviour, and well, we don't like to use the term budget because it gives a connotation of spending less money. It's really about financial management and getting the most out of your own finances.
Now, according to most people's behaviour that we see out there, people are very, I guess, avoiding, or they use, if I can use the term loosely, they escape from looking at finance, especially in hardship times. They try and think that, I'm going to avoid it and it's just going to go away and disappear. What would you say to people like that out there that might be struggling with their finances? Maybe they've got unpaid bills or unpaid speeding fines or parking tickets. What's some of the things that we can, do to encourage them to face the facts?
Yeah, burying the head in the sand is pretty common, right? So number one is talk to people, talk to an expert, talk to advisors, and sort of get some advice. Or speak to your banks if you're having some issues with your loan. Speak to your bank, because they're going to they're one of the most helpful when you need it. So you just need to speak to them, be clear on your current situation, your future plans. The more you can tell them and the more transparent you are, the more they're going to be able to help you. So it's really, do not bury your head in the sand. Talk to people, look at your situation, and work a way out of it.
And I guess budgeting could be part of that, but making the call, the initial call, that's probably the hardest part.
Yeah, absolutely, having an awareness. I mean, between Daniel and I, we have over 20 years of experience in finance dealing with clients, so it's not a new thing to us to come across clients who have financial struggles. And quite often it's a simple matter of, again, to repeat myself, sitting down with a trusted advisor, coming up with a plan, and that plan in itself gives a client a feeling of confidence and I guess in a way removes that financial stress to allow them to move forward and I guess feel better about their financial life generally.
Well, there you have it. Whether the midterm report is released today or not, we're yet to find out. But if you're someone that is struggling with your financial situation and need help, please do seek professional and supportive advice so that you can get the help that you need and not remain in the dark. I'm Bass Tadros for Undercurrent.